Hello guys, welcome to the Trading Parrot. It's around 10 a.m. in UK time, and a couple of days ago I mentioned that 91.7 was going to be a tough level to beat, and the reason for that was the falling wedge and at the same time the past performance of Bitcoin around these levels. After we managed to conquer 91.7, after all, we managed to get into a new all-time high, but we didn't do that in a clean way. We spent 60 days with multiple rejections before we managed to conquer it. So what would you expect? And at the moment we are having a challenge going on in the price. At the same time, we are in the middle of Thanksgiving, so happy day for you and for your family. And we need to see now what other channels are thinking about this. You wouldn't believe what I just found. Guys, if you like this type of content, make sure that you're subscribed to the channel. Keep the notification on so you get notified every time I put out one of these videos. 1,000 likes on this video will be a dream. Make sure that it happens right now together with that comment down below. That really helps the channel on a day like today. I've got a new promo coming in from Bluffing. This one is called Race to BIP 4. Deposit and trade to win up to $10,000. This one is gonna last up until the 17th of December, so you still have time, but be quick if you like this particular promo. The link is in the description. You deposit 500 and you can get a reward of $70 all the way to $10,000. And there's a big debate going on at the moment in my Telegram channel. Everybody is wondering what's going on with CME gap over this weekend. Are we gonna get one or not? But the main question is CME, is the Chicago Exchange open today? What is the schedule? And there seems to be also an outage going on. So that might mean that potentially we got the exchange also closed already. I did a little bit of digging, and apparently Friday was supposed to be open in a shortened schedule. But there's also the ongoing technical outage affecting all CME markets, not just Bitcoin. This is a significant issue impacting trading right now. CME Group experienced a major technical outage starting early Friday morning around 2:40 GMT due to a cooling failure at Cyrus One data centers. This has halted trading across Bitcoin futures, S&P, Nasdaq, Dow Jones futures, crude oil, gold, and commodity futures, and even treasury futures and foreign exchange products. So pretty much everything. Our markets are currently halted due to cooling problem. Support teams are actively working to rectify. So it's gonna be a fun weekend. I remember a couple of weeks ago we had 3 CME gaps below the price and 1 above, and well, that was easier to forecast than this one, because at the moment, if we go to the chart on CME, we can see that it's flagged as open on TradingView, but we never know. I don't see the price moving at the moment. So it will depend on that. When do we need to count for the market being closed and start thinking that is the last price that we had on Friday for Monday open, to understand if we get a gap up or down, if it's bullish or bearish. Of course, by Saturday, probably we will know. At the moment, it's $91,325. If it doesn't move in the next few hours, it means it's already closed. So bear that in mind for whatever strategy you are thinking to apply. Aggregated open interest is right there. Take a picture. This is beautiful. This is a retest of a breakdown. This is the moment of truth. Is the aggregated open interest across all exchanges going to reclaim $31.37 billion, or is it going to get a rejection with a lower low into 28 and into the ultimate target, the technical target of $17.7 billion, which coincides, yes, with $67,000. Let's go into the 4-hour. This is the part of the video where I focus on swing trading. We'll cover a little bit more of fundamentals by the end, and in the middle of the video I'm gonna cover on-chain data and order book data as well. So yesterday we were hoping not to break this level of the breakout. So technically this is a minor fake out. Why? Because we were below it for a little bit, but we need to be forgiving with the 4-hour, which is not necessarily acting in the most perfect way. The daily is behaving a lot better. It's more much more reliable at the moment. We get a second signal now, peaking of volatility to the upside on the 4-hour. And we are forming a bull flag in here. Of course, a bull flag can overextend, can break down. At that point, we are no longer going to call it a bull flag. We're going to start calling it a breakdown, a fake out. But if we stay around here now, look at this. This is just trying to exit again. So that is typical behavior of 4-hour, that it hints a breakdown and then it reclaims. It's a little bit all over the place and we need to give room for it to breathe. Now, if it manages now to get into a next resistance of 93.714, that is previous support, previous resistance, we could form something that looks like a extended inverse head and shoulder. And I am going to remove this target. I'm going to do it again based on that one. This one is from here to this particular neckline, and I want to place it right there so we can get a target into around 106.579. Very precise. That is the order block that we start there. And you can see how, if you start picturing the future, how this could evolve potentially into forming major bullish patterns. For example, in here, we already have a cup and handle, right? This one in the 4-hour around here is a cup and handle. If we consider this shoulder there, we can form another shoulder in here and you get an inverse head and shoulder. But if you actually break out from that one and then you get a rejection here, you could get a way bigger inverse head and shoulder. And that is something that I like doing up front. I like trying to forecast what could come in before it happens. When it's already on the chart, you are too late. So you have to have that kind of mentality of trying to understand, if this one plays out, what new do I have on the table? And that's what we are trying to do. It's not about forecasting. It's not about marrying that result, if you know what I mean. It's about knowing what could come so you can prepare up front. Not myself, because I'm not going to trade these patterns. I'm already on a trade and I already have my plan and it's not changing for the time being. So even less during Thanksgiving is not going to change at that point with that low volatility. But if you already enter at 80K and you are in a better position than me, why wouldn't I be trying to help you to understand how things are going or whatever scenario you are? The daily is still in the breakout. There's nothing broken in here. It has slowed down against the resistance. We still don't break the daily resistance of the previous support in here, previous resistance here. And now we are once again trying to reclaim not just that, but the falling wedge. We'll see how it goes. That we have now fully settled the bullish cross on the MACD. Yesterday, I say that it was already confirmed. It was not. Today is the first day that is fully confirmed. I got the signal on my email. On CPR, no news. We reclaimed the second level and we are hoping to get in December the pivots somewhere around the $100,000 and go into that to lose virginity, which is something that you do when you touch the pivots. Or if you remember your teenager years, you can imagine whatever you want. On the weekly, if we continue any higher from here, we're going to have a low quality breakout. A low quality breakout is not something that it means bearish. It means still bullish, but it's a low quality. So it's got less strength to push us higher if it confirms the breakout signal, right? You get the signal once you cross this yellow line in there. And since it's just from 64 into 35, just 30 range of RSI breaking out with just the second touch. That's why it qualifies as a low quality. But hey, sometimes low quality is all you need to get a reversal. So I'm telling you, I'm notifying you. Together with the stochastic RSI, if we continue in this direction, if we hold these levels of 90s, on Sunday, we're going to get a stochastic bullish cross on Bitcoin weekly, which is great. Good news. I'm not going to cover these charts again. I pretty much cover them every day. So I want to stay a little bit more lean when it comes to the weekly time frame. Sorry for long-term holders or investors. You can focus on that on my previous videos. I always cover it. On leverage squeeze, we are getting one of these low quality sell signals, and I'm not surprised. We have rallied all the way from the low 80s into 91, 92. So at this point, we are starting to accumulate this elevated level of ratio of longs versus shorts that has so far in this area been the perfect area to sell into the new leg down. Is it gonna play out? Well, here's the thing. It has played out 3 times, 2 times in a row, and maybe the third time it could do a move down, but maybe from there you can start climbing back up. So at this point, I'm open for that to not necessarily sell that much. It could be the case and then we start climbing, but with the low volatility of the weekend, potentially we don't get anything this weekend. We're just a few days before we close the month, and remember, my dream for Christmas is to close above 94k, reclaim that to give, 50% weak, 50% body, at least is halfway bullish. We remain in the lower end of the percent oscillator. In here, below that 7%, it means that we have permission to look for longs. We don't have a reading on the ETFs because yesterday they were closed on the 27. Extreme fear at 25, but just about to turn into just fear. One more point and we go into fear only, not extreme. Let's go into liquidity. We continue looking into the short-term information. We have this triangle that broke out into here. We are hoping to get into the golden pocket of 0.5 to 0.6. This is measured from this correction all the way here. So we are looking into getting into this big liquidity at 94.7. That is part of the golden pocket. At the moment, this triangle, if it extended and if it broke out from the neckline of 91.7, has the potential of reaching that 95 liquidity. If I zoom in here, you're gonna notice that it's intense, but of course it's obscure. But what you have at 111 that currently is a bit bigger than 76. So we are now due to do what's next. 20k to the upside liquidates 111. It's a lot further away than just now moving 15k and going into 76. But here's the thing. 11k now is heavier than 76, and I don't think that was the case a few days ago. 76 was the king. So now we are turning 112 into a larger liquidity pool. Let's look at the constitution of this. What are the biggest orders? So 10x and less leverage is allocated here. So low leverage is exposed there, is exposed at 100 and is exposed at 95. And if you go for the other end, the degens, the 50x and more, they are exposed at 111, at 95 and at 100. That's incredible. Usually that doesn't coincide, but this time it does. And if I zoom in and I just focus to closer proximity, because 20k move is a bit too far to analyze, 95 is the biggest in close proximity. Just move 2k and you start liquidating, move 4k and you take it all. Then move 8.6k and you get into 100k and I go break even. If we go 2k down, there's not much. If we go 4k down, not much. We need to move now 7k down to take the 84.6. Okay, so that is also valid information to understand the mechanics. And yet in the last 30 days, 85k is quite decent. You liquidate a cumulative of 4 billion up until there. And here you start spiking into 97, 98, that is 6 billion, but of course it's a little bit further away. In the order book, we have a 92 and 93, a lot of resistance at the moment, and not a lot to compensate for support in the immediate area below the price. So we're going to have to look at those ratios in high block capital. Remember that all these platforms are currently in a sale. TTP indicators, Black Friday 50%, trading different with big discounts as you can see on the screen in here, 70% on high block capital, material indicators 50%, and trading view 80% with 1 month off. Yesterday I gave away that trading view subscription with Ultimate. The giveaway for high block capital, I'm giving 2 advanced yearly subscriptions for free. It's still on Twitter. Just find my post about High Block Capital and follow the instructions. Remember that we need to keep an eye on where it is the short-term holder realized price. In case we bounce up, we are already bouncing, so we need to keep an eye because we are just over 10K away from hitting the short-term holder realized price. And if we do, that is an area of yellow to red warning. Why? Because that is the average of the short-term holders that have been for a decent amount of time underwater, and they're constantly thinking, when the hell am I gonna be able to dump this crap that is hurting in my pocket? That is 104.4 at the moment. It has decreased from 105 in the last few days. It's coming down very sharply fast. The move up of the price now is slowing that sharp decrease, but still we need to keep an eye every 2 days on what is that price. If it goes below my break even, it's gonna be super annoying. On FIRE charts, you can see that there is still some support under the price. It's just that right there at 92.93, now we have $40 million there holding the price. There's also this vacuum in black in here. There's no fair value gap, so that slows down the price because there is structure there. Every imbalance has been taken in this area. Therefore, it's more difficult to use liquidity to teletransport yourself into 94K. But if we get lucky and we get into 94, then we're gonna be able to use these fair value gaps to move into 100K, crossing fingers. Below the price, if there's any dump over the weekend, there is this fair value gap up until 87.6 that you probably want to be aware of as well. Let's look at the funding rates. Yesterday they were negative. Let's look at the longs versus shorts. And we are close to a negative funding rate, just about to get in the negative. Look, if you get into this line, it gets red. Well, that was an early reading. Now it has updated to the final number and it's not negative. So false alarm, no funding rates new. Yesterday we had on the 27th in the morning, but nothing new in the negative. And we are now at 59 longs versus shorts with the price going up. This is not sharply decreasing. Remember that last all-time high, it decreased into 36 before dumping. The previous dumps were at levels, let me see, at 62. This one was at 54. This pump in here started dumping when the longs dump into 62. Now we are at 59. So it could be the end of this move up potentially. No, I really cannot guarantee anything. We have some support. This is the opposite on High Block Capital. It's showing in the close proximity in the 0 to 1%, some support in the 1 to 2 resistance, 2 to 5 resistance, 5 to 10 big ask again resistance, and then a lot of support from 10 to 20%. In terms of delta, we still haven't punished the longs. There is 273,000. That is something against us. And if I didn't mention this yesterday and I forgot, sorry, but we just hit the first band of open interest. We had 3 bands. This one, which is the largest one, at 110, followed by these 2 together, make up for some decent band at 101. That's my break even. And the first one now is gone. We just hit that level. There's still the open interest showing in there. So potentially there are shorts now entering at 91.7. And I think I read many of them are entering. So today the options expired. That 13.3, I can confirm now that was the notional. And the max pain was 102. So spot BTC has been trading in the low 90K region into the vent, well below the max pain of 102, implying that most out the money upside calls died. And a chunk of prospective puts expires or settles with some value, but not at full on cash to the big 80K put cluster. The immediate options overhang is now largely gone. So the very specified gamma pinning around today's strikes should fade. Short-term flows will shift to how dealers unwind residual hedge. Remember that many people are in a loss and they take calls, they take puts to compensate for their mistakes. They try to minimize the risk by using all this as a hedging strategy. I don't do that, but I'm well aware that many people use derivative for that. With price holding materially below max pain but above the deepest downside strikes, the tape still reflects a cautious bearish positioning backdrop, but the risk of a one-off expiry-driven air pocket is lower now. Instead, watch whether spot demand, ETFs, perp funding, spot flows can sustain above 90K, and I fully agree with that. So typically in the 36 hours after a big expiry of options, you need to focus on holding certain levels if you were rallying to the upside, because there was always an incentive to push the price closer into the max pain from the market maker. But once that unpins, you want to keep that price there to confirm that there is still motivation to go to upside. Otherwise, moving up was just a matter of the options expiring, and since they already expired, we are due for a leg down then. Guys, do not forget that every day we are producing the Crypto Intelligence Report. This is sent to my YouTube account, my Telegram, my Twitter, and my Patreon gets the full report, which is like 10 times bigger than the summary we sent for free. So let's have a quick look at what other channels are thinking, because if we get pretty much everybody saying the same, it might not play out. Do not underestimate how many people combined are watching all these channels together. And I will speculate that that's over millions of people watching all of this. Bitcoin Hyper identify a critical resistance at 93,700. That is the resistance that I think I found around here. That is previous support and resistance. That is the target that ideally wanna build an inverse head and shoulder there that can break out into a target of 107. Coin Bureau Trading warned of extreme caution despite the bounce, emphasizing that Bitcoin remains in a bearish range with the rally 88-89 testing major resistance at 92-93. So we got 2 already out of 2 being cautious and careful with a dead cat bounce. Satoshi Staker says that is questioning whether 80K really mark the actual low. 3. Crypto Crown says that he says that in December has only 53% probability of closing positive, and we already have negative October, November, so calling for 53% chances of closing green and then the rest again in red. I'm not sure if we can really get October, November, and December in the red, but anyways, I really don't know what's going to happen. But again, that's a 4th negative outlook coming from this. I haven't watched any of these videos, so there could be some hallucination as well on this AI. More Crypto Online didn't cover BTC in this analysis. He is hoping that we hold 90K as a higher low, and he calls the October 10 liquidation event as the worst in Bitcoin history, which I don't think is the case. I think it's the worst liquidation in crypto in general, all coins, okay? I believe that Bitcoin liquidated less than 2 billion. The 18 billion came all from altcoins. That's how I remember it, but you are welcome to challenge that in the comments. Gareth Soloway presented a high probability stock market short setup. So if he's calling for a short, everybody's calling for also for a short, for things being a critical resistance for a bearish outlook. We got pretty much across the house, everybody looking for downside. I'm not fully sure about Crypto Crown if he's really bearish, so I will leave that open. Crypto Anoop is targeting 100 to 105 if current momentum sustains. They're talking about institutional adoption, all of these things, I just completely ignore it. Thanksgiving, low volatility, low volume. You can read the full report and have a look at the trading setups, because basically we read all the channels and we find all the setups that they are talking about, not to take them, but to understand what other people are thinking. 14,000 Bitcoin withdrawn from exchanges in a significant on-chain development reported today. Data indicates that over 15,000 Bitcoin has been withdrawn from exchanges, totaling 47,000 over the past 30 days. That's crazy. I would like to see the total, the net, because there's been also lots of deposits, right? People are selling. So how much is this compensating? And I'm really missing my indicator, the Big Well Explorer, because that is the perfect tool that I created to do this. Unfortunately, on TradingView, they pull out that data, so it doesn't work anymore. JP Morgan sets a 240,000 long-term target for Bitcoin. S&P Global downtrades Tether to weak USDT, and the agency cite rising exposure to high-risk assets, including Bitcoin itself, because part of the liquidity of Tether belongs to Bitcoin. So if Bitcoin goes to zero, pretty much Tether loses a lot of the funds required to operate. So in a nutshell, for the swing trade, in the area where we are, nothing has really broken yet. There's still a chance that we complete the target, the technical one, into 97K. The moment we start breaking this below an RSI, I'm gonna upgrade this into around 59, no longer 55. And I will say we should defend 90.6, 90.7. That is also the biggest cluster of volume. So we are attempting desperately in here. If you look closely, you're going to see how many wicks there are there. And look at the volume profile. So we are doing everything we can to stay above that cluster of volume. That is an area of a lot of trading going on in the past. There is exchange between ask and bid, and it needs to settle above it. It's very simple. That sets all of this above the point of control, and then we unlock a little bit more upside. And in that case, we can get into the 97. Careful at that point, because on my previous analysis, getting into 96 and going into 100K, that is where we got the rejection of the dead cat bounce, and we started and we fully confirmed the bear market in the last cycle. Even if it doesn't play out, there should be a lot of turmoil around that area. Psychological level, previous levels where we started the bear market, and all of that is going to create a lot of drama in that area. That's what I'm expecting. Of course, I will be happier than ever if that is not the case. If we just go into 101 and we carry on into 110, you know, we can make the video literally drinking the most expensive champagne that you can think of. Don't think too much, because I might not want to spend in that one. But anyways, I hope you enjoyed the video. I hope you have a great weekend, Thanksgiving. Hit the like, subscribe, write down a comment down below, and I'll see you in the next one. Bye-bye.